Okay, this is a good example of an overlapping Fibonacci trade that's set up on the US Swissy pair on Tuesday, December the 6th, 2011. And here's the daily chart. See how we came down to support, there's old resistance, support, bounced off it, inside candle, and we're starting to head up. So, basically we're still looking at a long scenario on this, preferably until we get some candle action showing us otherwise. But on the 1 hour chart, I've got the fibs drawn in here, and I've got the pivots on here. You can see that from this low up to this high, let me just zoom this out a little bit here, zoom it in, pardon me. From this low up to this high, we had a retracement of 50%. Okay, from this low, from the prior day, or pardon me, from last Friday, up to the high, we had a 38% Fibonacci retracement. So look where it came to. Look at these highs back in here. And you can hardly see it, but there's a yellow line here. There it is, 92.30. That's the M3 daily pivot. Right there, same place. So we're at a support resistance level. We have two Fibonacci overlaps right here. And we have a pivot. Right? That's a good place to buy right there. Okay, and you need about a 20 pip risk with the volatility the way it is right now. Now at the same time, what was really good, now remember to do this, go check your other ones, look and see what the index is doing at that same time. So let's bring it up here. It's also overlapped and come back down to some old level of what used to be support in here and resistance here. You see that? So that sort of confirms what we're looking at. On the stock market side of things, it was kind of interesting. On the 1 hour chart on the Dow 30, this is what it was looking like. Price had come up. Look at the divergence going on here. Like actually, price went a little bit higher in here. Let me get these lines off of here. Price had gone a little bit higher on this swing. It went a little bit higher than this one. So price is going higher. But look at the MACD down at the bottom down here. It's going down. See that? So not only that, but it came down, retested the neckline. Right? This is MACD negative divergence on the stock market at the same time. Okay, if I move it ahead just one candle here, zoom in a bit, move it ahead one candle, it came up and it's looking negative here, right? So that's at 7 a.m. Eastern time. So we're still in the London session here. So everything's showing us that maybe the stock market's going to fall off. That would be bullish for the US dollar, right? And it would be bullish for the US Swissy. So let's go back to the US Swissy. 20 pip risk because of the volatilities. You're in here like around, you got 92, 25-ish kind of area in here. So you got a risk down at the 92.05 level. So a 20 pip risk for a classic A, take a 20 pip profit on half, 40 pip profit on the second half. So if you're in at 92.25, you want to see 45 on part of your position. And that just about happened here, just missed it by a pip, but the next candle went shooting way up here. So this was, in fact, you got your entire classic classic A, profit targets of 20 and 40. Okay, now again, you want to read the conditions of the market. The stock market was actually started to rally again after this, so this is where you want to be really cautious and get your profits. This is a day you're probably not going to get your extension levels or anything beyond these highs in here because of the strength of the stock market, meaning the weakness of the US dollar. And that is in fact what happened. By the way, if you are watching this as it came down and bounced up, did you notice that the market flow is up here? Right? And did you notice that the MACD is crossed above the signal line? So it's actually a VIX trade in here. But I would call this an overlapping Fibonacci trade here first and foremost. It was just a really good setup with a pivot level and old highs and lows in there all at the same place. Okay? So there you go. Measure you get an anchor high point and go down to different swing lows, and each swing low, like if I measure from this swing low to this high, the next swing low I use should be lower than this swing low. In other words, I wouldn't use this swing low here to measure from. I'd use this one, and the next lower one's down here, and you could measure from this one down here. Okay, that was on the US Swissy pair, and it was during the London session, and it was on December the 6th, 2011.